So now I'm going to go through the chart and show you the volume up-down setup. I'll do it on Euro, and for those who are trading futures, I'll also do it on the ES. And first, let me show you how you can set up the volume up-down indicator. So you right-click the chart, you go to Indicators. In here, in this list of available indicators, you'll search for the volume up-down indicator. It is this one. You double-click it, and this is just the standard setting of the indicator. You don't need to change anything in here. Maybe only the width. Alright, so you can set it for wider values, so the bars are wider. But setting this won't change the functionality of the indicator. This is just visual settings. Alright, so this is how the indicator looks like. This is the volume up-down indicator. And let's now have a look at the setup and how it works. So as I said in a previous video, we are looking for significant spikes in volumes, like in here. So in this case, I'm going to draw the flexible profile over this area. The spike which I'm interested in are those 5 candles, and those 2 are extra. One before, one after the volume spike. Alright, this is the volume spike. The volume spike can be like 1, 2 candles, or it can be 4 candles. It doesn't really matter. The important thing is that the volumes are heavier than average volumes around this volume spike. Alright, so let's get back to the chart. This is the profile which I've drawn over this area. Heaviest volumes being in here. So what you do is you draw a line there. Afterwards, you wait for the price to go upwards or downwards from this area. As you can see, it goes downwards. So you wait for a pullback and you go short from there. Alright, that's it. So let's move forward. Let's search for some significant volume spikes. Now, there is one in here. So let's use the profile like this over this area. In this case, heaviest volumes being in here. Price goes downwards from the level, you go short from there. In this case, the price doesn't react to the level, it goes upwards, so this one would be a losing trade. So now there are 2 volume spikes, this one and this one, so let's have a look at the first one first. Heaviest volumes being in here. Price goes upwards from the level, returns back and reacts to it. This one would be a winner. So let's now have a look at this volume spike. So we are interested in those 4 candles, and we'll also draw the profile over this one and this one. Like this. Heaviest volumes being exactly at this level. So we draw the line, wait for the price to go upwards, and now we are waiting for a pullback. This time, losing trade. So there's another significant volume peak in here, those 4. So I'll draw the profile over the area, including 1 bar before, 1 bar after. Heaviest volumes being in here. The price goes below the level, 4 30-minute candles are below the level, so you go short from there with 10 pip profit, 10 pip stop loss. Another winner. Now in here, there is this very significant volume spike, but also if you look at the European session, also those volumes are heavier than the rest, so you can also use those volumes. So let's have a look at this area first. Heaviest volumes being in here. Another nice reaction to the level. So let's now have a look at the second one. So the next volume spike is this one, and actually maybe we can use this whole area because all those candles are heavier than the rest. So I'll use wider area, I'll use it like this, and now the heaviest volumes are in here, so this will be the long level and you go long from there. Let me measure the distance. Yeah, it would be another profit. So this would be a winning trade. So in here, there's nice volume spike right there. So I'll draw the profile over this area. Heaviest volumes being in here. So let's have a look at how the price reacted to the level. This is the reaction to it, but let me see if it was 10 pips, alright? Yeah, it was 12 pips, so this one would be a winning trade. It would be a tight one, but with 10 pip profit target, it would be a winner. And now another volume spike is this one, those three. Heaviest volumes being in here, so you wait for pullback, you go short from there, and this is the reaction. A 13 pip reaction, so this one would also be a winning trade. Now another spike is in here in the Asian session. If you compare it to those volumes or to those volumes, it's not that significant, but if you compare it to those volumes around, it is significant, alright? So because of this, this one is also a level to trade from. In this case, the heaviest volumes are in here. As you can see, the price missed the level and made a reaction to it. So this level would get discarded because of this test, which came a little bit sooner. Next significant volume peak is in here. Heaviest volumes being in here. You wait for a pullback, you go short from there. Unfortunately, there was macro news. This was PMI news on the US dollar, so we are not trading during significant macro news, so there would be no trade. I'm pretty sure that there would be a reaction. The price would react to the level if there wasn't the news. It was a pretty nice level, pretty nice volume spike, but within the news anything can happen, so it's always best to avoid trading during the news. Now another volume spike is in here. Those volumes, heaviest volumes within this area are in here, and the price slowly goes below the level, returns back, so you go short from there. The 10 pip stop loss would get missed by just a tiny bit, like half a pip or a pip, and then there would be a profit. Alright? So this one would be a tight one, but also a profitable one. Now in here, we have volume spike right there and right there. If there's only one candle with volume spike, I prefer to skip it, and I prefer to trade candles where there are two or more. Alright, so I'll skip this one. and I'll look into this volume peak. Heaviest volumes being in here. This is the level, price goes below it, so we'll be entering a short. There's a pullback, you go short, price goes upwards, so it is a losing trade. Now in here there is a volume peak right there. Those volumes are heavier than the rest. So I'll draw the profile like this. I'll only consider those 3 candles. But maybe it won't really matter. Maybe if I use more, then the heaviest volumes will still be at the same place. Yeah, there are. Alright, so in this case it doesn't really matter what you consider the heaviest volume peak. Heaviest volumes are in here. So the price is above the level it creates, 1 or more 30-minute candles above the level. Then returns back to it, you enter long. That's very nice trade in here. Another volume peak is pretty clearly this one. Heaviest volumes being in here. Price goes above the level, tests a little bit above the level and makes a reaction. The reaction is 15 pips, 2 pips before the level. So this one would get discarded because it already got tested by this reaction. So the reaction was there, only a bit sooner, so you want to discard such a level. You don't want to trade it anymore. Now another volume spike was in here, those candles being heavier than those. Heaviest volumes being right there. Wow, this is nice reaction. As you can see, even though this volume spike wasn't that significant compared, for example, to those volumes in here, it was significant in this given session and the price reacted to it very nicely. Now another significant volume peak was in here. Those candles, heaviest volumes being right there. Price went above the level, returned back, so you go long from there. Let me just check if this wasn't a stop loss. No, it wasn't. The price only went 7 pips past the level, then it would be a winning trade. Now another significant volume peak, definitely this one. Heaviest volumes being in here. At this place the price went above the level, 2 whole candles above the level, so you'll be going short when the price hits the level, alright? So in here the price hit the level, you go long. This is the reaction you are waiting for. Another significant volume peak is in here. Heaviest volumes being right there. The price goes above the level, returns back. Let me see how close was this reaction. Alright, 2 pips. And then a reaction. So this one would get discarded because the price turned only 2 pips above it. Alright, if it was 3 pips, it would still be discarded. 4 and more, I wouldn't discard the trade. Alright, but if it's 2 or 3 pips, it's definitely best to discard it. Now in here, there is one very strong volume peak right there. So let's draw the profile over it and let's see where the heaviest volumes were. Now, it was in here. The price missed it by just a tiny bit. But maybe I think that I should have used wider area. Not only this, but the volume peak is actually wider, so Maybe I should have considered this whole area. Let me see if the volumes change if I move the profile. If I make it wider to see the whole peak area. This one. Okay, so now the volumes are higher. So I should probably use it like this to see the whole volume peak. Not only those candles, but this whole volume peak. As you can see, the price reacted to those volumes. As you can see, sometimes it matters exactly what volume peak you choose. Sometimes it doesn't, sometimes it does a bit. Alright. Now there is another volume peak right there at the late New York hours. Heaviest volumes being in here. Price goes above the level, creates two whole 30-minute candles above it, returns back, you go long. Nice trade, nice reaction. Alright, so the next day, another volume peak is in here, in the European session. Heaviest volumes being right there. Okay, so the price doesn't go back to the level. So there would be no trade in here. Also, it may get tested right there. Let me see how close the reaction was. Well, over 4 pips, so this one would still be valid, but the price didn't get back to the level, so there would be no trade. So another volume spike that stands out is in here. Heaviest volumes being right there. As you can see, the price got like few pips below the level, but I don't really consider that a sign, because what you want to see is more significant movement, not something like this. This is not a sign of strong buyers or sellers pushing the price anywhere, alright? This is just a rotation which took place 1 pip below the level. So I consider it like a level to go long from, because the price went upwards from those volumes. Alright, so I wait for the pullback to the level, go long from there. But as you can see, there was strong macro news right there. Macro news candle. Price just went past the level without any reaction. But because of the news, there would be no trade. Now in here, there is a very nicely visible volume spike. Heaviest volumes being in here. Unfortunately, the price didn't retrace back to the level, so there would be no trade from this level. Now, the next day, there's a volume spike in here. I don't really count this one because it was just one bigger candle, alright? I only count this one because there were more of them. The heaviest volumes in here were right there. So from the level, price went upwards. So we'll be going long, wait for the price to go back and go long from there. Alright, another nice winner. Now the first volume spike, those candles, heaviest volumes being in here. The price missed the level and made a significant reaction, so this level would get discarded. The next volume spike is in here. If it was only this candle, it wouldn't be that good, but there's also this one with heavier volumes, so I would have probably taken this one, like this, to cover both volumes. Let me see where the volumes were the heaviest. Alright, so in this case, it's hard to tell which volume were the heavier. Maybe if I zoom it a bit. Alright, so the heaviest volumes were in here. So let's have a look if the price reacted to the level. Oh yeah, it did. Here is the first touch. And this is the reaction to it. Now another volume spike is in here. So we draw the profile like this. Heaviest volumes being in here. Unfortunately, price tested it a little bit sooner. This was the reaction around 1 pip sooner. Level would get discarded. As you can see later, there was a proper test. The price reacted to the level, but I personally wouldn't take such a trade. Another volume spike in the European session. Those volumes. Heaviest volumes being in here. The price went downwards from this area. So you wait for pullback, you go short from there. Alright, another nice reaction and another nice winner. There's also a little volume spike in here, those two candles. Now it's hard to tell where the volumes were the heaviest. Okay, so it was the higher volume cluster. It was this level. The price went above the level, 2 whole candles above the level. Then the price hit it, and this was the reaction. Around 18 or 19 pip reaction to the level. Then I don't really think that this was any significant volume spike, but those volumes are definitely heavier than the volumes around them. So let's draw the profile over this area. Heaviest volumes being in here. The price gets 3 pips close to the level. This is 3 pips. And then there is a reaction. So probably I would have discarded this one. If I didn't, then there was another reaction in here, even closer to the level, so I would definitely discard it when it created this reaction. When the proper test occurred, there was a strong reaction to it, but I probably wouldn't take such a trade. The level was already over-tested, in my opinion. Now in here there was a volume spike right there, not that significant, maybe I wouldn't have taken it, but let's just have a look how it worked. This is the heaviest volume peak, and this is where the heaviest volumes were. As you can see, it got tested a little bit sooner with significant reaction, so there would be no trade there. If I took it with limit order, probably it would be a winner. But still, this is not that significant volume peak. Probably I wouldn't have taken it anyways. Now in here, there's a significant volume cluster. There's a significant volume peak. At this time it's only 1 candle, so it's not that strong if it were more candles, but still heaviest volumes being in here, and this is nice reaction. Now another volume peak is this one, those 4 candles. Heaviest volumes being in here. What happens is price goes below the level, creates 2 30-minute candles below it. So when the price hits the level, you go short. Let me just check if this wasn't a stop loss. Okay, it wasn't. There was just a 4 pips in here against the level, and afterwards the price made 10 pips in this direction. Alright, so the next significant volume spike is this one. It will be the last one in the euro that I'll be showing in this video. Heaviest volumes being in here. Price goes upwards, indicating buyers were entering their positions in here, pushing the price upwards. When there is a pullback, you go long. Alright, so this one would also be a winning trade. So that's all the examples on the euro. For those who prefer to trade futures to Forex, I'll show you how the setup works on the ES, which is futures for Standard & Poor's index. So this is the ES futures for Standard & Poor's index, 30-minute chart. Let's have a look at the volume up-down setup. In here, there is a significant volume spike right there. Volumes are heaviest in here. So let's have a look at how the price reacted to the level. Right here. What was a reaction to it? Another significant volume spike. This one. With heaviest volumes in here. This one would be a loser. You would go short, but the price went upwards. Next significant volume spike was in here, at those candles. This is where the volumes were the heaviest. From those volumes, price went downwards, made it back to the level again, and you go short. Alright, so there was another nice reaction to the setup. Another significant volume spike was this one. Heaviest volumes being in here. So you go short from there, and it would be a winner. In this case, there was only one candle like that below the level, so you could also discard this trade, alright? This is not an ideal trade, but still, the reaction was there. It would be a winning trade. But there's no problem in not taking a trade like that. Now, another spike was in here. Those candles. Heaviest volumes being somewhere in this area. As you can see, the price tested the level a little bit sooner, so this level would get discarded. Another volume spike was this one. Heaviest volumes being in here. So let's have a look at the reaction. Okay, only a small one. So this one would end up as a losing trade. Another significant spike is in here. Those candles, and the heaviest volumes are right there. This would be the level. The price went downwards, retraced back, but it seems that it would miss the level by just a tiny bit. Very strong reaction, but it would be a miss, alright? So there would be a no trade from there. As you can see, the second test would be a winner, but the first one missed the level by just a tiny bit. Another significant candle is this one, but it's only a one candle, alright? So I don't consider it that significant as compared to a situation when there are more of them, like in this case. But just if you are curious, let's have a look at how it worked. Heaviest volumes being in here. Alright, you got tested right there. This was the test. So that would be a no trade from this level. So the next day, another volume spike was in here. Heaviest volumes being right there. The price went downwards, retraced back, and this was the reaction. Very nice one. Now another volume peak was in here, those two. So let's use the profile like this. This would be the level. The price went upwards from it. So we'll be waiting for a retrace and long from there. So let's have a look if the price actually went back. Alright, so it didn't, so it would be a no trade. Next significant volume spike in here. Those are the heaviest volumes. This is nice reaction to the level. Alright? Based on those two candles. Very significant volume spike is in here. Heaviest volumes being at this level. So let's have a look if there was any reaction. No, the price didn't go back to the level, so no trade there. Another volume spike is in here. Those candles. Heaviest volumes being right there. The price went upwards, returned, and this is a reaction to the level. So this one would also be a winning trade. Another spike in volumes is in here. Those are the heaviest volumes. This is the pullback. Price reacted a bit sooner, so the level would get discarded. If it wasn't, then the proper test would be a winner. Another very strong spike is in here. It's only one candle, but let's have a look at it. Heaviest volumes being in here. Price goes downwards, returns back, you go short. This is the reaction. The next day, so it'll be the last day I'll cover in this video. There was a volume spike in here. Heaviest volumes being in here. The price didn't make it to the level again, so no trade from there. Another significant volume spike is in here. Heaviest volumes right there, exactly at this level. Smaller reaction, depends on your profit target and stop loss, either winner or a loser. Alright, there was a reaction, but only a small one. Now there's one more significant volume cluster which I see, so let's check it out. It's this one. And the heaviest volumes are in here. There was an opening with a gap. The price is above the level, which means that we'll be going for long. First, there was a smaller reaction in here, and then a bigger one in here. Alright, so that's for the volume up-down setup. I hope you liked it. It's a very simple setup. It's basically a no-brainer. Probably one of the most simple setups which I have. So anyways, I hope you liked it. I hope that you will give it a try, and I'll see you in the next video.